Hi, welcome everybody. This is the third edition of my US stocks and options blog. I hope you enjoy it. Let's get straight in. Well, the purpose of this is to show people what research has been taking place over the weekend, ready for the market opening on Monday. So we're going to look at news that's due out, news about companies that's come out recently that might affect their price, value line reports that are being produced, market indices, watch lists, earnings, trading, investment clubs, and a lot more. So official economic news, it can be really important. Some news that came out last week that would affect inflation drove the Nasdaq to a new high, previously not seen since 2021. So this week's news is all about the economy, non-farm employment. Now for the UK people, that sounds a bit strange, but in the US, they separate employment and unemployment into farm work and non-farm work. Why? I don't know. Anyway, the non-farm, obviously the biggest part of the employment and unemployment figures, comes out this week on Wednesday. And we'll see their unemployment claims and also what's happening to average earnings. So non-farm employment levels are expected to increase, good news. Unemployment claims are expected to reduce, good news. And hourly earnings are due to increase. That could be taken either way. Great for the economy, perhaps not so good for inflation. We'll see. Some company news I picked up during the course of last week. These are all stocks that we regularly look at for trading, and several of the clubs are into these stocks. And first is NYCB, the New York Community Bank. The bank this week put a statement out to say that it's got internal control issues. Very bad news if you're a bank. Before we even got at that news, I'd put NYCB on my kill list. I don't like the figures there. Then we have Paramount. They missed their revenue expectations, but posted a surprisingly good profit. So that's probably good news. They came back into the news when it was announced that Warner Brothers have halted merger talks with them. However, Comcast, CMCSA, is still exploring the possibility of a merger with Paramount. Macy's, the department store company, have announced that they're closing over 150 stores. These are termed unproductive stores, but they represent 20% of the company's estate. Let's see where that takes them to. It could make them more profitable in the long run. However, they're going to have some costs to face in getting there. Here is a list of the value line reports that were updated and published at the end of last week. It's about normal we get this sort of number. Now, we go through these carefully, looking to see what news is there, what's changed, how the company is faring, and that's taken into account in all of the research that we undertake. And we have my indices. So the S&P 500 increased a little last week to 1.79%. Now, the eagle-eyed amongst you might see that that's a little lower than it was last week. However, we're now taking into account splits. The Nasdaq did 3.79% last week. It went up, the index that is, to 211. The Dow Jones had a very slight fall, 0.02%. However, the winner again is the TICN 4x4 index. Now, bear in mind, there are 162 companies in the index, and overall, their prices increased by 4.37% in the last week. However, 30 of these are long-term losers. They haven't actually made any money or increased in price at least since the 31st of March 2020. Now, if we can get good at getting out of stock as well as getting into stock and also getting into the right time, we will get much further than we have been doing. A couple of notable changes in the last week. Hawaiian Airways, HA, they actually jumped up in the timeliness score from Value Line 2 levels to get to the top slot of 1. There are 5 levels, 1 to 5, 1 being best. On the other hand, Mercury Systems, MRCY, they fell 2 levels to arrive at the bottom level of 5. So we'll look at the stocks, 222 of them. We'll look at only getting into those with a value line timeliness score of 1 or 2. So that's the top 40%. We want quality stocks, preferably over 45 on the TICN scoring system. We want value stocks, preferably with a score greater than 40 on the TICN scoring system. And now we've got this new timing score, also out of 52. And really, we're looking for scores of above 42. However, above 35 is acceptable. So that gives us a total score. I put in the price, that's the closing price from Friday, so that we can keep within a price range that's under $100. And I note whether the comments in the latest value line reports are positive or not, and when earnings are due. So I initially came up with 5 stocks: BRC, PLAB, PYPL, RNG, and MTCH. So these all had good scores for timeliness from value line, for quality and value from TICN, and also for timing from me. And they're within the price range, and they had positive comments, and they haven't got earnings due imminently. However, when I looked more closely at these, I began to think, I'm not quite sure about this timing score. I think I need to make an adjustment to it. Now, having only been out for a week or two, it's not surprising. I'm constantly researching the figures that we use and trying to improve upon them. Let me show you what I'm concerned about in this case. It's not going on my dance card because the risk to reward ratio is simply too high. PayPal, on the other hand, looks good. So the quarterly, monthly, and daily charts and matching indicators are favorable. It's got the timeliness score, it's got a great quality score, 47, 52 for value, and the timing is at 35. Although that's the minimum I'll accept, it's still very good. The price at $60.54 is in the right area for us. The comments are positive from Value Line, and we're not due to have an earnings announcement. As far as proximity goes, again, even though the S&P 500 went up sharply over the last quarter, PayPal is also increasing and getting towards beginning to close that gap. RNG is fine too. So RNG, again, at lows for the quarterly, monthly, they're great. Daily, I would probably like it a little bit less, but I think it's a good one to get into. I think the timing is right on it. Perhaps it would have been better a week or two earlier, but we can't go back in time. And we're beginning to see a move upward in the proximity chart too. And Match was in the figures last week. Still a perfect opportunity to get into it. It hasn't popped yet. This is one that I would be looking at if I wasn't already in it. Now, as mentioned earlier, we have a bad habit of staying in some stocks just for too long. And there's my favorites this week, which, unlike the dance card I'm calling the kill list, I'm putting on that the New York Community Bank, NYCB, SSRM, who you will remember have had major problems with a gold mine landslide in Turkey. Kraft Heinz company, great company, slow mover, and just not the right time for it, and CCK. So these stocks are all rated by Value Line on timeliness as 4 or 5, and they score less than 20 on my scoring system for timeliness. They should be considered to be avoided at the moment, or perhaps defensive positions taken if you're already in them. And earnings. So nothing coming out particularly of interest to us on Monday or Tuesday this week. And then we've got an array of them going over the next 2 weeks thereafter. And there they are. I'll be particularly interested to see on Thursday what happens with BIG, Big Lots. That is one that a lot of the clubs have and, quite frankly, are losing money on. Fossil also, Tuesday of next week, is an important one for us. So let's keep an eye on those. Now, this is a little bit different. So last night on the Sunday night webinar with Owen O'Malley, we had a look at the so-called Magnificent Seven. And here they are on the top right. Meta, which is, of course, the Facebook company, Tesla, Alphabet, which is Google, Nvidia, Amazon, Microsoft, and Apple. And the point was being made that collectively, these companies are bigger than some seriously large economies, China, UK, France, and Japan combined. And they've had a really good 2023 so far. They're collectively 75% up, where the rest of the market is up 12%. 12% is not actually bad. So I put together here a little Magnificent Seven list to see how we're doing. Now, of the stocks, Apple, Google, Amazon, Nvidia, and Tesla have all had splits, which affects their price and their real price. So I've adjusted for that. And if we were to have bought these stocks, one of each, back on the 31st of March 2020, that says February, it should say March, then we would have paid $712.12 for them. And they would currently be worth $9,062.44. However, that would be like winning an accumulator bet on 7 horses, winning 7 races. It just is very, very difficult. However, I also looked at the top 7 on the TICN list. These are the biggest increases in share price. And we go back to the same date, you could have bought 7 of them, one for each stock, for $241.23, an absolute bargain. And at the closing price on Friday, they would be worth, taking again into account splits, 2,407 cents, an increase of $2,158. That is 894.93%, so nearly 900%. So they're no slouches. They're not quite the Magnificent Seven, hey, but they're not bad. We've got the live training coming up this next weekend. Friday night, we'll be together from 5 until 9, mainly looking at live trading because the market will still be open. On Saturday, we're looking at stock selection and buy to hold. On Sunday, we're going into options trading and a lot of new stuff that I'm presenting, which I hope people will find absolutely fascinating. We're going to be at the Sofitel Terminal 5 Heathrow in London, and there's still a couple of places you can book. We have given the hotel final numbers, but I think we can probably sneak a couple in. If you want to come for any or all of those dates, then either go to the website, myinvestmentclub.co.uk, or get hold of me. And those who are going to that, I look forward to seeing you hopefully on Friday evening. Thank you. Cheerio.